Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real options trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Make sure you have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator ready so we can do some easy math. And finally, remember, this is not financial advice. This is all just for entertainment purposes only. All right. Morning, everyone. Everything is up huge today, and that's not good for us because we've got all short call spreads. But the good news is this is probably going to sell off today, hopefully. And of all these call spreads, they are all December expirations, so we have 31 days to sort things out. And none of my strikes are in the money, so everything is still out of the money. So nothing to worry about so far. So let's check in. Boeing is actually flat. Let's take a look at the Boeing chart because we opened this yesterday. Even though Boeing's up 1.12%, we opened it yesterday around here. It's gapped up this much and our position is still flat. We're not down on this at all. So that's the power of options right there. Microsoft, we're down on this one. We're down $45. SPY is down 90. Roku, we're down 32 on this one. And then Micron down 64. So these may look like they're big losses, but they're just paper losses. So we're not closing any of these positions. Like I said, we still have several weeks till December expiration, so we have a lot of time for these things to play out. So no worries. Let's keep looking for new opportunities today, all right? First up, SE. Post-earnings move. It's selling off. Earnings, I think, were this morning. Yes, this morning before the open. So down 16%. Let's see if there are options to trade on this one. On the put side for December expiration, we're still trading December expiration, 31 days. You'd have to sell the 30, and you're not going to get paid for it. So skip the put side there. On the call side, the 45 is a little close. Let's do the math. If you sold the 45 and bought the 50, that's 54 minus 16 divided by 2 divided by 500, less than 4%. So we're going to skip this one. The volatility of this move was probably priced into the options market. That's why we're not getting paid for anything. Next up is Home Depot. Same thing, post earnings up 6%. Let's take a quick look at the chart. So it's up 6% today. It's hitting the 200-day moving average. Let's look at the call side. If you sold the 320 and bought the 325, that's 114 minus 58 divided by 2 divided by 500, 5.6. So that's not bad. Would like things to be a little bit higher than that. 320 on the chart. Where's that? 320 is right here. That seems very fairly priced. Can the move continue up? Yes. We'll keep Home Depot in mind. Next up, we'll go to Tesla. This one's already sold off today. It opened up higher and is selling off. Earnings for Tesla are January 24th. On the put side, if you sold the 200 and bought the 195, that's 253 minus 192 divided by 2 divided by 500, 6.1 if you sold the put side. On the call side, you got to sell the 265 and buy the 270. 287 minus 225 divided by 2 divided by 500, 6.2 on the call side. So still, everything's fairly priced on Tesla. Again, it's still kind of in this no man's land. It can continue this movement up or it can continue this movement down. I have no bias here. We'll skip Tesla. DoorDash. Still on its post-earnings move higher. Call side. The 100 is too close to sell, and the 105 is too far out, so we'll skip the call side. On the put side, same thing. The 85 is too close to sell, and the 80 is too far out. So we'll skip this one. Next, Uber. Earnings are in February. Uber's had this big move up. Let's look at the call side on Uber. The 57.5 is awfully close. And that's the one you'd need to sell. 70 minus 31 divided by 2. And that's divided by 250. That's almost 8% if you sold the 57.5 and bought the 60. Where's the 57.5? 57.5 is right here. That seems awfully close. You do get paid for it. Almost 8% if you sold the 57.5 and bought the 60, but it's interesting. This one's very interesting. I'm going to hold on this one for now. You know what? We'll mark this one. I'm going to come back later. Next is DraftKings. DKNG. This one is down today. While most of the market is up, this one's down. Earnings are in February. The put side, let's skip the put side. You're not going to get paid for it. On the call side, you'd have to sell the 40, maybe buy the 43. 37 minus 12 divided by 2 divided by 300. 4.1%. So now that we're a couple days after earnings, there's no more movement, which means all the volatility pricing has been sucked out of it. So there's no more premium as far as volatility goes. So we'll move on from this one. Next, Take-Two. Up 3%. Again, post-earnings movement up higher. Is this an all-time high? No. Let's look at the call side on this one. The 165 is awfully close. Let's do the math. If you sold the 165 and bought the 170, that's 132 minus 66 divided by 2 divided by 500. 6.6% return. That's okay. Where is 165 on the chart? Right up here. Again, it's awfully close for comfort. The put side, you'd have to sell the 140. It's a little far out to get paid for it, so we'll skip the put side on this one. Adobe, I think this is too big of a stock. It's a $600 stock. Earnings are December 13th, so we're about a month away. We got some time to do something in Adobe. We've had this big movement up over the past year. Anything on the call side? You'd have to sell the 675. There's a little bit of volume here. You sold the 675 and bought the 680. That's 575 minus 502 divided by 2 divided by 500. 7.3%. 675 on the chart. All the way up here. That seems fair. Although it's going to start to price in earnings. Even though earnings are a month away, it's going to start to price in earnings, making these prices on the options more elevated. Keep that in mind. Next, let's look at the solar stocks. We'll look at first solar and end phase. ENPH is first. These guys are big today. Post earnings by 2 weeks or so. Let's look at the call side. If you sold the 100 and bought the 105, 108 minus 58 divided by 2 divided by 500. 5% for the call side. That's not as good as I thought it'd be. So we'll skip the call side. On the put side, you got to skip the put side. 75 is too close and 70 is too far out to sell. You're definitely going to get paid for it. Let's take 138 minus 69 divided by 2 divided by 500. Yeah, you get 7% if you sold the put spread, the 75-70. Yikes. 75 is right here. Too much for me. You definitely get paid to sell the put side, though, that's for sure. Let's look at first solar. Same story here. This one's up 8%. Earnings are end of February. Good. On the call side, if you sold the 165 and bought the 170, 152 minus 98 divided by 2 divided by 500. Same thing, only get 5% if you sell the call side. On the put side, if you sold the 125 and bought the 120, that's 142 minus 90. Divide that by 2 and divide that by 500. Same thing, 5%. So first solar is a little bit less volatile, so you're not getting paid on either side. Selling the call side would make sense. Next, let's look at the home builders. So we're going to go through all of them and see if any of them are worth it. And first is KBH, KB Homes. We're going to move fast through these, okay? Looks like earnings may be coming up soon, too, on January 10th. Okay, so we got time. Was there an upgrade today? No, on the 8th. All right. Looks like we're getting close to all-time highs as well. Almost there. On the call side, yikes, these have moved so much. Skip the call side, skip the put side. Next we'll go to PMH. Hold on. Let's go to XHB. Can't read my own writing. So this is the Home Builders ETF. If you don't want to do a single stock, you can look at the ETF together. Here is the chart. It could get pushed down around 84 or so. On the call side, if you sold the 87, and you'd have to buy the 89 because the other ones are too illiquid down here. 53 minus 24. 53 minus 24. Divide that by 2 and divide that by 200. 7.2% if you sold the call spread here on the ETF. Huh. We'll keep an eye on this one. Let's go to Lennar next. Lennar, the 140 is too close to sell and the 145 is too far out. We'll skip this one. Toll Brothers, TOL. Same thing, up big. Two a liquid on the call side. On the put side, there's some volume on the put side. You'd have to sell the 75 and buy the 70, but it's two a liquid on the 70. 25.40 and only one traded. We're going to skip Toll Brothers. DR Horton's probably the same thing then. On the put side, if you sold the 120, it's still, this is not as liquid as I'd like. A lot of people made this trade though. Sell the 120, buy the 115. 92 minus 50 divided by 2 divided by 500, 4.2. So it still makes sense if you want to do something with the home builders to do the XHB, the ETF on the call side. We'll come back to that one later today. Next, BXP, Boston Properties. They're up 11% today. Wow. Earnings are in February. All right. On the call side, two a liquid. No contracts, nothing's traded here. On the put side, you'd have to sell the 50 to a liquid. We'll skip this one. Next, Starbucks, post earnings, still up. Post earnings. This big gap up after earnings and its continued movement upward. Could catch some resistance here. Let's look at the call side on Starbucks. No. The 110 is too close and the 115 is too far out. All right, let's look at the TLT. Bonds are moving big today because of the CPI report. On the call side, you'd have to sell the 95 and buy the 99. 37 minus 10 divided by 2 divided by 400, 3.3%. So you don't get paid to sell the call side. On the put side, maybe, if you sold the 85, sell the 85 and buy the 82. $300 spread. 46 minus 18 divided by 2 divided by 300. No good either, 4.6. So even though there's been a lot of movement in the bond market here, ETF, you're not getting paid. So we'll skip this one. Next, Coinbase. This one's not up at all today. It opened up higher. It's already sold off. We may have missed this one. On the call side, if you sold the 115 and bought the 120, that's 191 minus 135 divided by 2 divided by 500, 5.6%. That's okay. On the put side, skip the put side. If you sold the 75 and bought the 70, 150 minus 86 divided by 2 divided by 500, 6.4%. That's okay, but the 75 is a little close for comfort. Where's the 175? So maybe I'm at 75. Down here. It's interesting. Let's keep going. Let's look at XOP, the oil sector. Bouncing again. On the put side, if you sold the 129 and bought the 124, That's 90 minus 45 divided by 2 divided by 500. 4.5% on the put side. Not so great. On the call side, if you sold the 151 and bought the 156, that's 98 minus 43. Divide that by 2, divide that by 500, 5.5%. So not a lot of volatility in the oil either. All right, let's go to our IV rank scanner really quick, and we'll sort by volume. We've already got a couple good candidates so far today. SPY, skip the SPY. Let's take a look for fun. For December expiration, here are my strikes, the 456, 461, still out of the money. If you want to open something new today, sell the 465 and buy the 470. What do you get? 138 minus 71 divided by 2 divided by 500, 6.7%. So if you want to open up a short call spread on the SPY today, it's interesting. 465 on the chart. 465 is right about here. Doesn't mean it can't get there. Where's my strikes? 456. My strike is right above here. So we got some time. We got a couple weeks and we got some room to run, so all is well. Nvidia has earnings coming up. We looked at the TLT already. We already looked at C. We'll skip silver. AI. AI's got an event on the 15th. The 5th Annual Needham Virtual Infrastructure Data Analytics Software and Cloud Communications Conference. The CEO will present a fireside chat. Okie dokie. On the put side, if you sold the 22.5 and bought the 17.5, 56 minus 11 divided by 2 divided by 500, 4.5 on the put side, not so great. On the call side, if you sold the 37.5 and bought the 42.5, that's 78 minus 37 divided by 2 divided by 500, 4.1. So not so great on this one. I thought it'd be more. We got that fireside chat coming up. Next, the KRE. The KRE was up big today. I did want to check the KRE. I forgot to write that one down. Up 7.5% for an ETF. That's huge. Interesting. It's approaching the 200-day as well. If you sold the 48 and bought the 51, 41 minus 10 divided by 2 divided by 400, sorry, 3.8%. Thought you'd get paid more for that. On the put side, if you sold the 41 and bought the 38, 36 minus 12 divided by 2 divided by 300, 4%. No good on the KRE. Shame. Definitely a shame. Let's take a look at Roku really quick. Must be selling off. And it's kind of flat. On Roku, I've got my strikes short of the 95 and bought the 100. If you want to open, sell the 100, buy the 105, what do you get? 130 minus 71 divided by 2 divided by 500. Not as good, only 5.9%. All right, Let's go back to the XHB. That was the home builder ETF. Look at the call side. What did we pick? Selling the 87 and buying the 90, was it? 60 minus 19 divided by 2 divided by 300, 6.8%. Yeah, I think we'll open that one. Sell 87, buy 90. Where's that on the chart? 87's up here. All right, 87.90. So we'll go to verticals, change this to 3. The 87.90. Okay. So we'll sell 1 December expiration 87 call. And we'll buy 1 December expiration 90 call. Limit credit will go for the ask of 45. Preview that. Receive a credit of $45. Sell 1 87 call to open. Buy 1 90 call to open. That's a $300 wide spread. So the most you're risking is $300 minus the credit. We'll send that one out. It'll hang tight here. Okay, let's go back to Home Depot as well. Still going up on the call side. What is it, the 325, 320? Sorry, 325, 330. 78 minus 40. Divided by 2, divided by 500. No, that couldn't have been it. Maybe it was the 320, 325. 152 minus 78 divided by 2, divided by 500. That was at 7.4%. Where's 320 on the chart? Interesting. We'll keep Home Depot on the list. You see, it's got this gap still to fill. So if it gets up to like 320, 321, maybe even as high as 325 or 326, then we'll sell a call spread. But I'm going to hold off on Home Depot. We've got to put it on the list for tomorrow, and the rest of the week we'll keep checking in on it. Let's go to Uber. This will be the last one for today to follow up on. Up, 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 up. To about 60. All right. On the call side, if you sold the 57.5 and bought the 60, I'll do the math one more time. 77 minus 36 divided by 2 divided by 250. 8.2%. That's because the 57.5 is awfully close. 57.5 on the chart. The 57.5 is right here. It is awfully close. That's why you're getting paid almost. You're getting paid 8% if you sold that call spread. But it's moved up so much so fast. It's very tempting. I tell you what, we'll keep Uber and Home Depot on the list. If it continues to move up in the next couple of days, we'll definitely sell a call spread, but we'll hold on for now. Boeing is in the green and still losing money on our SPY. That's okay. We'll keep an eye on all of these next couple of days and weeks. On this XHB position, if it does get filled, 45 divided by 2. If this does get filled, we will set a buy to close order limit debit at 22 cents. We'll set that as good till canceled, okay? So we'll stay open for the next 60 days and hang out here with the rest of them, okay? All right, fun day today. A lot of opportunities. Everything was up really big. So when things are up very big like this or down really big, you get a lot of chances to sell on both sides, okay? So good job today. Thank you for tuning in. Tune in every day, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning to trade options together. Subscribe and like. Tell your friends that are trading options to tune in as well. We'll all trade options together. Thanks so much, and we'll see you tomorrow morning.